Hello, hello, hello. So today is October 1st, which means we're going to go over how our Roth IRA portfolio did in November of 2025. So you can see we're currently at an all-time high in the portfolio. Great to see. We're at $22,000, 923 and 74 cents. Look, we're up 100 bucks for the day about. That's 0.45%. See about the week, we're up 257, which is 1.14%. Month, we're up 6%, so it's a great month. $1,310 out of market. 3 months, $2,000, 9.63%. Year to date, up 17%, which is insane. $3,380. 1 year, up 22, $4,163. And ever since I transferred over to Robinhood, which was in last May, question mark, let's see. Yeah, May 2024. We are up 29.96%, so just about 30%. I think all that goes to say that is amazing. Quite frankly, we love to see that. I was definitely worried after the performance of 2024 how 2025 would go. And we're getting close to the end of the year, and there's still October, November, and December. We got our last quarter, Q4, to still go through. But I'd like to stay a little optimistic. I know the market typically does good at the end of the year, so let's rock with it. So, very happy with the results so far this year. I'm trying to stay optimistic, although I think valuations are getting questionable. And the middle of the month reviews that we're doing, they're going to get more and more interesting because valuations are getting kind of wild. But nonetheless, we have 56.46 shares of QQM, which makes up $14,000.24. And for VU, we have 14.48 shares, which is $8,898.79. So we still got about that 60-40 split we aim for. Love to see that. Contributions for the year, $2,100. That's $63 of an IRA match given from Robinhood's 3% with the gold membership, which costs $50 a year. So if you're looking off this number alone and contributions I get in my account, we're profitable on gold. But we also do other things like the free margin we put in treasury bills. And then I did have a gold future that I owned for a short time that made me some good money. So love to see that. Doing great there. And then, yeah, we've got our weekly buys. We have some dividend history here. So we're going to go here. Let's see. Okay. So we got a dividend coming from Vanguard today. Technically, so you got 25 bucks if you feel like it. But and we had a dividend for QQQM, and that was on 26, so 5 days ago, $16.91. So it was the dividend quarter, or yeah, dividend quarter. So we love to see that come around. Get some extra gains in the portfolio, $41 of free money. Just finally realizing those gains that are factored into the stock price. So we like to see that. Very happy about it. Love to see my dividends. They kind of give me a false sense of success. So now we're going to get into some stocks for the day. So first, what we're going to do, we're going to pull up this little screener thing I'm working on currently. And we're going to look at the price of Apple. So we're going to look at the price of Apple for the last 5,000 days. You're going to see some things populate here. Okay, let's look. So maybe let's just focus on the year. So 365 days. Does it populate a little bit? Okay, so don't pay attention to the deviations. Those they're a little tricky because we don't got enough time frame to look at here. But currently we can see that price has been pretty steady for a year. We're going to be up a little bit. But let's go in a closer time frame even, 180 days, and then let's give like a 50-day on the deviation, a 10-day moving average or something like that. Okay, so we can say the stock price for Apple has been decently mute. I mean, going from about $200 to $250 perhaps, so it's doing all right. Yeah, we're at $255 currently, so we have seen some pretty good gains in this last bit of a year, and this does beg the question if those gains are well deserved or not. I would say that's a good way to phrase it. So Apple has seemingly been struggling with innovation, and I feel like I'm reiterating this point. But every year an Apple iPhone launch used to be the next massive thing. There was always some crazy innovation with it. And not saying they don't innovate anymore, but simply they're hitting some technology ceilings. And I think the world's starting to realize it. Apple used to be the most valuable company for quite a while. They're on a crazy run, but as we will look at, that has changed, and companies have overtaken Apple, and their growth has slowed down quite a bit. So, a stock I wanted to look at, and mainly because they released a new iPhone line this month. So, in September of 2025, they launched a new iPhone line, and I did. From the last one, I have the 16 Pro. I like that phone quite a bit. It's quite nice, but they did underdeliver on the Apple Intelligence aspects of it. But yeah, so they changed it up a little bit this year. They sometimes do like an SE model, a budget model. This year they did iPhone Air, which is just a thinner, lighter device basically with a little bit of a different design, kind of like a large square on the back of it, rectangle. And then they did iPhone 17 here, a couple different colors. This is like the pretty standard model. They maybe switched up the camera look a little bit. But yeah, I mean, really beyond that, it wasn't anything too crazy. They're Apple Intelligence capable, slightly better camera. I think the Air might have a worse battery. The 17 probably have a slightly better if trends stay like they are. So pretty much the same exact thing. I think it's kind of the message of this year. And I saw an article saying iPhone 17 boring, but that's good. I was like, I don't know if that's a good way to look at it. I would say innovation is something we're still going to look at. But their main innovation is with software updates. Recently, they updated a new iOS, or at least opened it up, and I tried it. Pretty nice. A lot of new innovations, and it seems like software is kind of the way they're going. But they did also release the AirPods 3, and AirPods are absolutely massive. Huge revenue driver for the company of Apple. And a big thing about these is that they are AI compatible, so they can live translate. So when you're listening, people keep talking about at the nail salon, you can hear what the people are saying about you. So that's pretty cool. I'm a big fan of that. I wouldn't mind trying them if I get them on sale. I think they're a little expensive. Let's look at that pricing right here. Okay, of course, we're not going to see up front. Okay, but yeah, I know. Okay, $249 for a pair of earbuds. Yeah, that's a little excessive to me. I think you can make a case for 100, 150 might be pushing it, but 249 is that's pretty steep, I gotta say. So I can't quite get on page with that. Another stock I wanted to look at was Nvidia. So we're gonna look at Nvidia, and we're gonna kind of do a longer chart here, and I think that's pretty warranted, considering. Let's change some of these factors up. Considering that the story of Nvidia is a long story, so for a while there they didn't really have any crazy notoriety, right? It was pretty underground. They were known for selling GPUs, and they did that great, and they're mainly focused on gaming. But my NVIDIA review that I did a couple months back did show that that's a very small portion of what they do now. They got data centers, and they sell these chips to major companies. That's kind of their main revenue drivers, and why people have made the stock as big as it is. So if we look at this, you'll see, and up here is about where I made my valuation video. I think right at that point. And I said, hey, this might be slightly overvalued. Just a little bit, right? And it dropped at the time. I was like, yeah, maybe I'm on the money. I guess not. So they just been going crazy, going back up. And I do think we can have a look at a couple of these technical analysis figures I got on the screen here. So we got this black line, which is stock price. We got the orange line, which is the moving average for 200 days. And the red line, which is the moving average for 50 days. The cross, as people call it, is when that 50-day moving average moves over the 200 moving average, and that's normally a bull indicator. People like to see that because it means the recent acceleration is moving faster than the long time acceleration, more or less, right? The average price. So we can see that is the case. It's flying well above it, and I mean, I haven't seen it fly that high above it in a while. I mean, you could maybe compare it at this point, maybe. But that's just crazy. It's had just an absolutely historic run lately. And we can see the historic volatility here. So we have deviation based on 200 days, and then the moving average of that follows by 50 days. And the deviation, if we're looking at a percentage of the stock price, we can see some high points. So we can see back in 2019, okay, that's interesting. And that's probably just because the stock price was dropping at that point, but it was still selling. And if we look, you'll see the larger point in about 2023, which we had a drop off in the price, and then obviously deviations stay kind of the same. But we had these elevated points of deviation around when the stock was rising. So you had 2020 period, 2022, 2024, kind of throughout it. And interesting enough, the deviation is kind of low. And I do think a big part of that comes from the stock price just increasing greatly, but also it's been kind of increasing at a steady rate, so it really hasn't been deviating too much. It's been kind of a consistent returner, which is very interesting to see. I do think it'd be worth note to look at the NVIDIA performance over time at the same time. So yeah, a little bit up for the day. Week up 5%, crazy. Month up 9%. 3 months up 20. Year to date up 37. 1 year 53%. 5 years 1,334%. Absolutely insane, right? Now a big point I wanted to highlight, and they might break another record. $4 trillion market cap. I remember last year, Nvidia hitting a 3 trillion market cap, and I was like, wow, that's crazy, right? That's just so cool. First company, well, the second company to do it after Apple. They're really breaking into it. Yeah, they broke 4 trillion, and now they're looking at 5 trillion. So when I say inflationary asset bubble environment, it's kind of what I'm talking about. I think Nvidia is an amazing company. I think this valuation might be getting a little ahead of itself. Valued at 187. Look at Morningstar. That's fair valuation, but I do think this assumes a lot of growth still. So yeah, personally, I'm not sure. We could look at some stuff like the trading volume of it and see how that's kind of changed over time. These metrics will still be on here. We can just ignore them for now. Okay. So if we look at the trading volume, right? Look at that. That's just insane. I mean, if we look at the 2022, those sales were great, right? They're probably just a bunch of positive ones, but look at that trading volume in 2024. It has been insanely just going up and down. People have been trading this stock like crazy. So if you want to get in a high swinger, yeah, this is kind of what you're looking for. Another company I want to talk about was Costco. So let's look at Costco here. Let's look at the initial returns. Down about percent for the day. Week down 3%. Month down 2.5%. 3 months down 7%. Year to date barely up. Past year 3.57%. 5 year 166%. So the 5 year's doing great. Don't get me wrong, that 5 year is doing great. But they've been seeing a lot of slowdown in their stock price. And if you look at a max, you'll kind of see this too. So they have had amazing appreciation. I think it's no secret in Costco that that's been going on. And I'm not quite sure what's slowing it down, but the reason I did want to bring up Costco is because I recently did a video on Lululemon. And in this video, I talked about duplicates being sold at Costco, and how they're going through a lawsuit for this. So I thought this was just a very interesting article, and how when we make revenue and cash flow assumptions, it's important to look at stories because this is there too. If we're going to assume that, and let's say that Costco makes a pretty good amount of revenue off their dupes. Okay, so if you're not looking at their stories, you're going to have this issue pop up where you're assuming this revenue will continue, and not only continue but grow. In reality, it might not grow, it might not even be there. If they get sued and they're caught selling dupes that are just so appealing and really breaking that Lululemon trademark, then they might not be able to sell them anymore, and they're going to have to pay a hefty fine in the lawsuit. So this is an important story when I was looking at Lululemon to keep in mind about how sometimes we let our estimations of numbers alone just get kind of outlandish, and the sentiment behind it isn't there. And I think that also rings true for things like Nvidia, where the numbers might not make sense, but the sentiment really does make sense, and people are really bullish. And I suppose you could factor that into your revenue growth estimations, but it's kind of hard when you don't have a real way of measuring that. So, with that story in mind, I did want to look at Lululemon's price quick. Okay, so let's look at Lulu. And I do have a discounted cash flow bit over here, so let everything kind of load up quick. Okay, so the current price of Lululemon is at $177.57. With all these estimations up here, and in my last video, I showed how I got these estimations, and I felt pretty confident about it. Their implied share price is $270, which says a lot because that means they're undervalued by 53.18%. That's crazy. That's a lot of money, you know. It's a big difference. And I said that you can mess with some of these growth evaluations and you can still be at a pretty reasonable buy-in. So we're going to even assume 30% for those first 2 years, which is low. You're still undervalued by 20%. I think Lululemon is a decent buy. And I think a story like Costco does ring true, where you have to take into consideration what's going behind the scenes, not just the numbers, but based off the numbers and having to take a deeper dive into Lululemon, I think it's at a great valuation. My personal opinion. I would say for me, if I see this thing drop to $160, and I think after this video I'll set an alert, I'm going to take another look at it and look at the sentiment behind it that goes along with the numbers. But I did want to look at this, so you can see the price in the black line here, and you got the long moving average 200 days in orange, and short moving average 50 in red. You can see how it's dropped below the 200-day moving average lately, which is a bull indicator, but obviously it's a lagging indicator because it's already dropped at this point, right? But this goes to show that sentiment is quite low on it. And if we look at the volatility over time, we've had some interesting points. And you'll see again, 2021, 2022, stocks were trading like crazy during this point. So it kind of makes sense where overall the market's going to see volatility. You can see that in the VIX indicator. But if you look especially in late 2024 and 2025, the volatility has been incredible. I mean, you're almost saying a 50% volatility over 200 days of stock price. Yep, 200 days of stock price. And a lot of that comes from the stock price dropping. But say the stock price has dropped in half or so. Even at that point, you're still seeing high levels of volatility above the volatility in the past. So this is a stock where if you're looking to profit off volatility, I think there's a good chance that you could profit on the way back up. If you want to do options, this would be an options play where you could definitely look at getting a call on it. Or if you're bearish on it, then, let's go for the sell, right? Let's hope it goes down. Let's get some puts on it. So, yeah, I think these are all important aspects to look at when evaluating companies. I think this is a great story here. You got these metrics you can look at. That's going to give you a valuation, right? Evaluations are important, but we have to take into consideration the story behind it, just like we're taking into consideration the story behind Costco. So maybe Costco, I'll evaluate another time, see where that lands, but I know that Lululemon is very interesting. I think the competition is definitely there. Do I think they deserve to lose half their stock price? I don't know. That's kind of where I'm up in the air. So now we're on here, let's talk about how our portfolio is doing right now and compared to in the past. So we can see over here, we have red as our contributions, and we've steadily been contributing more to the account at a faster and accelerated rate. And we're currently sitting at, let's see, $14,645. Okay. The balance of the portfolio is at $22,918. And SPY in comparison would be at $22,134 just about. So if we take a look over here at the portfolio profit difference, we can see that at the portfolio profit in general that we're profited $8,272, which feels incredible considering our account is not even at $23,000. That over a third of it is pure profit that I didn't have to put in the account. So very happy to see that. You can see the average of it moving up over time. It's been steady. If we look at the difference here, I kind of changed my strategy around 2022 of contributing more into QQQ to get that NASDAQ exposure, which has a beta of 1.2. I thought it would outperform the market, especially with how the future would go. I guess a safe bet on that, right? But you can see that we're outperforming the SPY by a fair amount. And I would have to check these numbers here because I'm not quite sure how accurate that would be. But you can see that the current difference says we're outperforming by $784, which is incredible. So we're beating the market by $784. So very happy with that. That shows that I guess the time that we're putting into this for now is kind of finding value. But also in the future, when this grows and we already have that difference to work off of, it's going to find even more value. So we can look at our positions over here. QQQM, we kind of talked about the equity. And same thing with VU. Shares, here's our cost basis if you're interested in looking at that. Portfolio balance, contributions, this is where the profit comes from. 56.49% of our contributions is pure profit. Love to see that. SPY would be about at here. I believe that's pulled. Yep. And then we can look at our position weighting here, and QQQ has been taken off, so you see it's running away from that 60% mark, but nonetheless, we're trying to keep it there. So that's doing good. If it was at 38.8%. All this goes to say that the portfolio has been doing great, and another month of all-time highs. Nerve-wracking, yes, but also very happy to see it. Feels like the hard work is paying off. Some of you guys are enjoying these videos, getting a little more attention, so very happy to see that. If you have any questions or want me to look at any stocks, please drop it in the comment. I would love to. Any suggestion, if you leave a suggestion for a stock, I will look at it, quite frankly, at this point, because I got the time. I love to keep doing that, doing discounted cash flow models, making separate videos on that. Trying to up that maybe to 2 videos a month during the middle of the month, see how we get there. And then obviously doing our monthly portfolio recap. Then at the end of the year, I will also be looking at my 401k when I get that match. And I'll be analyzing my net worth at that point of the year. And then obviously when my birthday comes up and the year turns around, I'll look at my net worth at that point too. So we have some really fun stuff on the horizon if you're interested in stock investing, looking at different stocks and hearing the stories behind them. Or if you're interested in index funding, which is kind of what I do. Feel free to subscribe, share with your friends, like the video. Let me know any suggestions you got in the comment, and I would love to oblige that. So take care, and thank you for watching.